Joseph, we had big results from two large copper miners today. Did we learn anything about the investability of this sector?
Yeah, there were production updates from Anglo American, which announced record volumes of copper being dug out of the ground, and Antofagasta, which is another big Chilean copper miner. And so record production, but as you say, we're really looking at costs, and copper is quite a high cost metal to dig out of the ground.
I mean, what I'd be worried about at this point is in the context of China that reported 7.7% GDP growth, that demand for this basic industrial metal might be kind of soft. And if you're pushing record production into soft demand, you get a plummeting price. Is that something mine investors need to worry about?
Yeah, definitely. That's a risk, especially when it's starting to look like China might be facing a fairly big financial crisis. But record production is also a sign of healthy operations. Possibly, the mines are being well run. It's interesting to know that miners in general in London today are kind of up their shares.
Right.
So that's a sign that investors see this as kind of healthy.
Right. And do we see it in the results? Do we get a sense of, as volumes go up, are costs going down?
Well, yeah, this is the investment case. You're looking for cost savings, and the cash costs at Antofagasta, for example, were stable last year. And people are also looking at guidance for next year, and it's going down a bit. But at this point, if you're investing into this thesis of cost savings at miners, you still face a couple of years of faith, more or less.
Right. And is there anything that investors can monitor in terms of promises about cost savings being realized?
It's interesting to note that analysts are starting to believe these promises from chief executives about cutting costs. I mean, like cost estimates for 4 big miners have sort of like dropped recently, which is interesting, and earnings revisions, which were in a huge downward march last year, have kind of started to bottom out. So someone kind of believes this story. But if you're an investor, just be wary of what costs you're looking at, because some miners break down their cash costs by individual mines. That's what Antofagasta did today with its big copper mines in Chile, but others don't, including in the same metal. I think we've mentioned before that Kazakh which is in Kazakhstan, doesn't really do that. It just gives an average cash cost, which is very important because miners don't go on sort of blended efficiency drives.
Sure.
They squeeze out efficiency out of individual mines.
Right. But surely, let me interrupt to just ask a final question. If there is a real economic crisis, people are just going to run from copper as fast as they can, right? These subtle distinctions between producers and within producers.
Yes.
Surely it's still a general bet on the economy.
Yeah, and that's especially true for copper as an industrial metal. But I would look at iron ore, for example, where Rio Tinto is one of the very first miners to say, right, we're going to cut costs. And that's a arguably quite an oversupplied market at this point, risky China, and yet the shares have been rewarded so far, or are rewarding investors.
Thanks very much.